Hello and welcome to the College Investor Audio Show. We're so glad you're hanging out with us today. Let's take a look at this. This is interesting. The average tax refund is up over 10% this year. That's what the IRS is showing. Just a quick reminder before we get to that is whenever you hear a topic on the podcast, you can always check out the article that goes along with it at thecollegeinvestor.com. Inside those articles, we'll have resources and links and everything you could possibly want to know about the topic on hand. You can also follow us and like us and all those things. Click the buttons on social media, and you'll find us pretty much anywhere you are. Just search for the words The College Investor. We'd love to help you along wherever you are in your money journey. Tax refunds. Okay, so running more than 10% larger this filing season, with the average individual refund reaching $3,742. That's up from $3,300 and change at roughly the same point in 2025. The increase is being driven in part by new deductions, which were signed into law by President Trump, that are appearing on returns for the first time. So the IRS released its cumulative filing season stats through Feb 27, 2026, comparing them to the same period last year. The data covers roughly 51.5 million individual returns received out of approximately 164 million expected before the April 15th deadline. The numbers are showing this. The IRS has issued 36.5 million refunds so far this year, totaling $136.6 billion, up 9.4% from $124 billion at this point last year, 25. Though the total number of refunds issued has dipped a little bit, which is down like a little over 1% from a year ago, the average dollar amount per refund has climbed quite a bit. Among taxpayers who chose direct deposit, the numbers tell a different story. By the way, soon you're not even going to be able to have a choice. It's all direct deposit, but I digress. The IRS processed 36.9 million direct deposit refunds, just a tick above $138 billion, which was up 11% over the same period in 2025. The average direct deposit refund came up to $3,739, up almost 9% from last year. Overall filing volume is slightly lower than a year ago. The IRS received like 51.5, like I said, which was a little over 1.5% decline from the same period in 2025. Don't really need to dive into those numbers too much, but it is interesting to see that more taxpayers are using software and preparing their own returns. Got to save a little bit of money doing that too. As long as you have a simple return, it's pretty straightforward and cheap. Trump's tax changes are driving the increase in refunds, though. The increase in average refund size is really just because of a new set of deductions. Congress approved 4 new above-the-line deductions for tip income, overtime pay, earned income by seniors, and auto loan interest. Other changes are also factoring in. The cap on state and local tax deductions, or SALT, was increased under the One Big Beautiful Bill Act, or OBA, potentially benefiting filers in high-tax states who do itemize. The standard deduction is, of course, going up. The child tax credit became more generous for the 2025 tax year. Here's what this means for your tax bill. For most people, the new deductions are providing a meaningful but a modest benefit, not like a windfall. The average increase is like $360. $30 a month ain't bad, but it's important to remember that tax refund size is not purely a function of tax law changes. How much a worker has withheld from every paycheck throughout the year, that plays the biggest role in whether a return results in a refund or a balance due, and how large that refund or that bill turns out to be. If you adjusted your W-4 withholding after the new law passed, you might see different outcomes than those who did not do that. Timing also plays a role in how the season's averages look. Refund figures typically peak around mid-February. After that mid-Feb peak, the average tends to drift lower through tax day, April 15th, as higher income filers who often owe money complete their returns. If you're not expecting a tax refund, you're likely not filing early. The pattern suggests the 10.6% year-over-year gap could actually narrow somewhat as more returns come in over the next 6 weeks. There's over 100 million people who need to file yet. So it's going to go down, that return number. And by the way, If you're expecting a massive tax return and you get pumped up every year to file your taxes early so you can get that big old refund check, consider withholding more. What you've effectively done is given the government an interest-free loan from your paycheck for them to use on whatever they want all year long. But if you're like within $100 or getting $0 in a refund, you can effectively use that $3,500 to invest in all year long and actually have generational wealth. Max out those IRAs. Stop giving the government interest-free loans all year from your paycheck. That's your money. You use it how you want. All right, and that is our show for today. I get fired up about tax refunds and stuff, I know. But if you want to ask questions, get to know us a little bit better, we'd love to help you wherever you are in your money journey and give you tons of ideas on what you can do with that $3,500 tax refund. And then stop getting the refunds and use the money better. You can find out all the stuff at thecollegeinvestor.com. Also on social media, just search for the words The College Investor and you'll find us pretty much wherever you are on social media. We're there too. We'd love to connect and get to know you. And that is our show for today, and we'll talk to you again real soon.